Did you hear that? I was just reminded that I have a gavel, and I'm not afraid to use it, ladies and gentlemen. We are in the state of California. It is sunny and 80 outside, and yet we're all in here because Glenn Mulready can't, get quiet and sit down. All right. Thank you all for being here for the main show of the 2024 summer meeting of INCOIL. Your president, your INCOIL president this year is Texan Tom Oliverson, but today has been dominated by Oklahoma, whether it was this morning with Ellen Hefner and her presentation or me. Get used to Saturdays being dominated by Oklahoma. We may have the tougher schedule year one, but we will be fine, I hope. Anyway, ladies and gentlemen, thank you so much for being here. I want to get going on some of this stuff, but first I will need a motion to waive our quorum requirement and then a second in a voice. Thank you. So moved, second. I also need a motion to approve the April 13 minutes, which you can find on page 290. Can I get a motion and a second? All in favor? And I also want a motion to approve the June 14th minutes, which you can find on page 309 of the book. Can I get a motion on that? And a second. Thank you so much. And a voice vote on that. All in favor of accepting those minutes? Thank you. All right, well, we'll start today with a continued discussion on the INCOIL Strengthened Homes Act, Program Model Act. You can see that model in your binders on page 326 and on the website and app. Before we go any further, I'll turn things over to the sponsor of that model, Representative Jim Dunnigan.
Thank you, Mr. Chairman. So we had a good discussion on this model at our spring meeting in April, as well as our interim meeting last month. And just to do a quick recap of where we are and where I'd like to see us end up, the current model, the version follows what's becoming a very popular concept across the country, which is establishing a strengthened homes program within the Department of Insurance to provide grants to people to retrofit their dwellings, their roofs to certain standards. And then on the back end, we need to resolve the question, should insurers be required to issue some type of a premium discount to those who have strengthened their homes and met certain building requirements? So today I'm excited. We're going to look at the Oklahoma law that recently passed and see what we can glean from them, because as I said during our interim meeting, I like what they're doing. They provide more detail and guidance that we can use in our model. And I also like the provisions in there that they limit the program to single-family primary residences, and they give priority to lower-income applicants. So today I'm looking forward to hearing from Oklahoma Insurance Commissioner Glenn Mulready, and he can provide us with his background and experience in the state law. And this is also a great opportunity for INCOIL to kind of determine where we want to land so we can take action on this in our November meeting and have it ready for next year. Thank you, Mr. Chairman.
Thank you, Representative Dunnigan. We'll now hear from our speakers, and as Representative Dunnigan mentioned, with us here today, at my invitation and my permission, is Commissioner Glenn Mulready of Oklahoma, with whom I got to serve 2 years in the state legislature, and who's been dearly missed in the legislature, but we're happy to have him downstairs in the insurance office. Commissioner Mulready, please go ahead.
Thank you, Mr. Chairman. For those of you that don't understand the irony or fun of that, back in Oklahoma when I'm at the Capitol or on the House floor at some time, and I'll see Forrest and I get to say, well, good morning, Mr. Chairman, and it spins some heads at the House Capitol in Oklahoma when I'm calling Forrest Bennett Mr. Chairman. So it's fun to be here. Yeah, we had our, I will say that our bill that we helped push through, and I might add too, that we have the three members that are mainly responsible for getting that through the legislature this year are here at the meeting today, Representative Bennett, Representative Hefner, and Representative Tedford, and that we got that through the legislature. We modeled our bill, really, and I always like to admit this up front, 100% on the Alabama bill and their law that they've had in place for a number of years now. Their program is called the Strengthen Alabama Homes Act. I changed ours. I got real creative and changed it to the Strengthen Oklahoma Homes Act. Creative like that. And I told the Alabama Commissioner Fowler that in Oklahoma, I'm really big on R&D, spending time on R&D, rob and duplicate. And so we are 100% duplicating that there and have learned a lot from them. I'll throw that out, that Alabama's been super helpful in that. And I might also add that Brian Powell is the individual who was at the Alabama Department, who has walked that through for years and years with Alabama. He has now moved over. He is on staff at the NEIC and is assisting all the different states around with this issue. So he's become quite an expert in that space and with IBHS, and a great resource for us. We've been on the phone with him a number of times, and in fact, I will throw out there too that we are organizing for us, but as well as other states interested, a trip down to the IBHS facilities there to learn in more detail about their program. So with that said, to your point, ours is limited to homes that are owner-occupied, single-family, primary residences. We will require a homestead exemption, and that is the easy way of determining that it's an owner-occupied home. So we do have that. We are using the IBHS system, so we'll have an evaluator that the homeowner will pay for that evaluator. It's going to cost them a couple or $300 to have an evaluator come out and determine exactly what that roof is like or what the understructure of that is to make sure that that's meeting requirements. They then will solicit 3 proposals from certified, IBHS certified roofers. Now, we have some in Oklahoma already prior to this program, but we're getting word out there too to try to, that's a whole nother constituency, if you will, for us to communicate with to make sure that we've got IBHS certified roofers who can then do the actual work. Property owners then basically agreeing to retrofit their property or build new to the roofing standard, silver or gold standards that IBHS has. Ours really, for the most part, will be focused on the roof part. Oklahoma is a big hail state, wind and hail, and so our main focus is on roofs. We get more than our fair share of convective storms. 80% of that damage when that comes through Oklahoma is roofs. So we have a timeline on that, if you will, a deadline of 6 months to have that work completed. So they'll go out, evaluate that. If the work gets done, we then will be issuing the grants directly to the roofer. So the money is not going to the homeowner, it's going to the roofer. Our plan at the moment, we're currently just putting this all in place, the infrastructure, if you will, is to divide up our state into 5 zones so that we don't want to be accused of, I don't know, we're only taking care of Oklahoma City, or we're only taking care of Tulsa, or we're ignoring the rural areas. And so we want to have sort of a fair shot at that for all the different areas of our state. But that's what we're crafting right now. And we did, from a funding standpoint, we are a non-appropriated agency. I think a number of departments are. In fact, we send a whole bunch of money up the street, almost $400 million. But we're non-appropriated, but we do have leftover funds. And so our ask of the legislature was, and of course, every time I bring it up to a legislator in the hallway or whatever, this program, their very first question was, how much money do you want? And so I kind of developed a line with them where I would say, look, I don't want any money, I just want permission. All we want is permission here. And so we set some limits on there to make that a little bit more palatable to folks, or, just, lower any concerns with the funding side of that. So we're allowed to use up to 50% of our leftover funds, up to $10 million. And so we will have that $10 million this year to issue grants, which at the moment we are planning to cap at $10,000 each. I learned from Alabama that they had a much lower threshold, and then realized that full IBHS standard was quite a bit more than that, and so that's how our number has been changed. So our intent is to issue out $10,000 grants to homeowners as they are redoing that roof to fortify their home. We did have a little bit of a curve thrown at us late in the session when it went over to the Senate, and they did add a sunset clause on that. So this program will come up again. It goes into effect November 1st of this year. It will come up again for a review and a sunset in 3 years, so November 1st of 2027. So in summary, that's what's happening with our Strengthen Oklahoma Homes Act. It's gotten a lot of attention. We were receiving a number of calls. I know Representative Tetford, I think yesterday, had a call from the media asking about that, and so we've gotten a lot of media and generated attention on that. So with that, happy to take any questions, Mr. Chairman.
Congratulations on getting attention, Commissioner Mulready. We appreciate all the work that you did on that, and I will certainly be among those voting to reauthorize it in 3 years. I think next up we'll be hearing from Matt Overturf.
Thank you, Mr. Chairman, and as promised, I'll be brief. I just want to express our appreciation for the committee's work and Representative Dunnigan on this issue. As you recall, it started last year as just a mandatory discount, which we obviously expressed some concerns to. We have since expanded that significantly to a broader package, and I'll include the catastrophe savings account conversation that we had on Thursday. We readopted you all readopted the building code model, which we find very important, and now we've expanded into grants and the discounts. The one suggestion that I would make with respect to the mandatory discount language is to pull some language from Sarge Pollock's Kentucky bill, House Bill 256, that requires the discount be actuarially justified and also leaving it the amount or the percentage of that discount up to each insurance company, where they are able to do it for what works for their risk profile, their book of business in each state. We find that to be a very important inclusion, and Representative Pollock was kind enough to include that in the Kentucky bill, so we appreciate that very much. And with that, I will conclude my comments.
Thank you so much, Matt. All right, we're going to hear from Carl, but he's not going to be able to make it. So at this point, if there are any questions about the Strengthen Homes Act from any legislators, Representative Dunnigan.
Thank you. For the Commissioner, how does a person show that their roof has been done by the proper person? How do they certify that, and how do you track it?
Thank you. I left that off that presentation, that certified evaluator who goes out at the beginning of that process that I mentioned. They are an IBHS certified evaluator. They will circle back at the end as well, and so when they go out and inspect that it's done to standards, they then report back to us, and that's when a check gets released. But that same evaluator will be doing be at the beginning and at the end of that process.
Okay, what if a person improved their roof on their own dime? Can they then come back to you for a retro grant, or does it have to be done prospectively?
Has to be done prospectively, yeah. We need that evaluator out prior to. With IBHS standards, you know, anyone today could go and get Class 4 shingles and receive a discount on their insurance price, but just the shingles alone often will result in a discount on their insurance, the high-impact shingles. But the IBHS program is just a lot more robust than that. It involves the underlayment and the thickness of the underlayment, the water, the vapor barrier, the drip edge is of a certain size, so there's just a lot more to it.
And does your law mandate discounts from the insurance, or does it allow it to naturally flow if they put it on and they qualify for whatever discounts the insurer may have?
Yeah, ours does not mandate the discount, but you know, from our research, and we actually have publication out to the legislature as we were trying to push this through, already filed with us are discounts that range from 10% to 43% on that wind and hail portion of the premium, already on the books today.
Okay, and then one other for that. So tell me again how Kentucky does their insurance discounts or adjustments.
So the language in the bill was, it's actuarially justified, which I think we've talked about here. But then what that actuarially justification is left up to each individual company. They submit that to the Department of Insurance. Early on, we saw some states where that language wasn't included, and the department said, no, the discount's going to be a certain percentage. So then it was the same for everyone, whether or not it worked for that individual insurer or not. So that was the concern. That's the concern we're trying to avoid with the language that we were able to get in the Kentucky bill.
Thank you.
Thank you, Representative. Sarge?
Thank you, Mr. Chair. Just wanted to kind of share a few comments about our Kentucky bill we did actually pass. Commissioner, we did copycat from Alabama as well, somewhat. But I obviously want to thank the role that we all took in part. I want to give a shout out to Commissioner Sharon Clark, our Department of Insurance Commissioner, obviously the insurance industry. Basically, and again, this is important because I know in the state of Kentucky, tornadoes, 70-mile-an-hour winds, and a lot of things are really, really devastating. Our state as well. And so this was a good piece of legislation, and we're all coming together to make this happen. As far as funding goes, typically what we found out in the marks we got was a fortified roof was about $1,500, $2,500 roughly, more than a typical roof. And so the restricted funds that we generated, which was $5 million on this particular bill from our fines and fees from our insurance companies who make that up, we take in, and obviously there's an application process. Again, Commissioner Clark oversees that, and then they would, if everything approved and all, then that $1,500 to $2,500 roughly on that part of it. The other part of the funding was to get our contractors certified. That was a big piece to it. The second big piece was obviously Matt shared with you about the discounts for insurance premiums and what that looks like. And it was important that we provided that. We typically, and I compared it to a security system type of discount that insurance companies provide when you go through the channels and provide that fortified roof in there. And so that is left up to each of the insurance companies and what that looks like. So obviously there was a discount out there that we wanted to make sure was available, but for us to mandate and specifically put that in the hands of the commissioner, saying this was an overall percentage, we decided to take this language, and I think it really made sense. And so that's in a nutshell is what we did. I hope that helps in providing the model that we're looking for here out of the NCOIL. Thank you, Mr. Chair.
Thank you, Mr. Vice Chairman.
If I might jump in and just echo your comments about Commissioner Clark. As the legislative process went along this year, she and I talked quite a bit. During that, we were both on that same path. And then since passage, we have spoken a number of times. We've scheduled some joint calls with Brian Powell to just ask a lot of questions through that. We worked at the beginning together quite a bit, but we're on a different time schedule now. So Kentucky's takes effect in 26, ours takes effect in November 1st of this year. So we're on a little bit different timeline, but we've been working closely together with her. Thank you.
Just a reminder, Commissioner, to answer questions through and with the permission of the chair.
You give him a gavel one time, you know.
I think we were supposed to share an Uber on the way home, but I don't think that's going to happen anymore. Can you talk a little bit about how you're ensuring that the $10,000 grants aren't going to homes that have just had roofs replaced? Like, how are we making sure that the money and the effort is getting to the places that need it the most, over and above sort of separating the state into 5 sections?
Yeah, I think back to Representative Donegan's question there, it really is centered around that evaluator. They are the sort of eyes and ears and the checks and balances there for us. And they're certified by IBHS. They're going out at the beginning to determine whether things are in place, infrastructure, that's not the right word, but you know, the underlayment of that fits their standards, because they may come back and say, listen, you've got, I don't know, 1/4-inch plywood in your roof, and that doesn't work. We need a certain level of, or a higher level of that in order to be a truly fortified roof. So they're the eyes and ears on the ground there, if you will. So they're at the beginning of that process, and they're going out and inspecting afterwards and just making sure that that contractor has done that to those standards. And nothing happens until that evaluator comes back to us and certifies that that roof has been done to those standards.
Thank you so much, and genuinely thank you for your patience with me. Are there any other questions, Representative Donegan?
Thank you, Mr. Chair. So my question is, yours is 10,000 grant, okay? So that may motivate somebody that's kind of borderline, we're going to redo it. Is that right?
Let me clarify. No. Up to $10,000.
Yeah.
So it's not set at 10,000. We are paying that cost difference for the standard roof to then upgrade to the fortified roof. That cost differential is what we will be paying for, up to $10,000.
All right, so you're similar to Kentucky, where if they think it's $1,500 to $2,500 more, that's the enhanced roof is what you're covering.
Yep.
Have you found that's working? I mean, is that motivating people? Are we just capturing those people that, I guess, need to do their re-roof anyway, now they're getting the grant to upgrade, or motivating people to redo their roof? Yeah.
With your permission, Mr. Chairman. You know, we're still early. I mean, we are not receiving applications at this point. Our intent is to start receiving applications in the fall and issue our first grants January 1st of '25. So it's really just too early to answer that question. I think my response to that from a gut level would just be, we really don't care, right? Like if there are more and more homes that are just fortified roofs, that's just a good plus for us in the state of Oklahoma. We don't really care whether they were going to do it anyways or they're choosing to do that because of the grant. I don't know that we have a preference with that.
Thank you.
Mr. Chair, I echo the commissioner's comments. I mean, in that we're early as well. Contractors are seeking, Commissioner Clark. There's a lot of buzz about it overall, but the bottom line is for us is to help offset claims. Is this fortified roof going to keep your shingles on? Probably not, but it will obviously, hopefully, in time, provide us some extra coverage to keep the inside part of our homes protected. And so obviously, again, we are early in the process, but our contractors are super eager to get certified and what that looks like right now. I do know that. And then again, there's a lot of conversations about what that looks like in the process and how that, as Commissioner said, we're starting it in about a year.
Just have one quick follow-up. Are you comfortable that the insurance companies are giving discounts? You know, that those discounts are available for people, they do it, they get the discounts?
Initially, when we first had that, we changed our language to get our insurance industry involved. So the language we have in our bill, making it optional, more or less, of providing those discounts instead of just mandating a specific discount, it changed everything as far as the wording in our bill for the insurance industry. So it was a big deal. Matt, you guys can share on that process, but I think once we changed the language in that discount part, Brad, whatever, I think that was a big home run for all of us involved.
Yeah, I agree with that. And I believe the Kentucky, it's still a mandatory discount. It's just what that discount is.
That's correct, yes.
Is left up to the insurer. So there's still the mandate to offer something by each insurer. And I mean, obviously, like they said, it's early, too early to have the process set up. But I mean, there will be an expectation that discounts are offered.
So they have to offer something, and you give them the flexibility is what that is. All right. Thank you, Mr. Chairman.
Thank you. I've loved this conversation. Representative Howe. Sorry, Senator Howe.
Thank you, Mr. Chair. And coming from the I'm a building code official is what I am. And so I guess, and I haven't been in, this is my first time in this committee here. So the question I have is why go down this road and not the building code road and just enhance the building code and make that a requirement? Rather, now it seems like we're going to have certain houses built to a certain level. And I come from a state that has a mini-maxi building code. So the building officials can only require what's in the code. And I'm interested to find where your experts are going out and watching this construction, if that's not a code official who we normally do that process. So where these folks are coming from to do that? And so I guess that's my question, is why not just enhance the building code in your state to require this and make it happen so the entire state, when it's done to that level, the entire state would get that discount from the insurance?
Yeah, my response to that would be the state legislature certainly could choose to do that, to change the building code statewide. That would have an enormous impact on cost to everybody, and I think that would be the negative aspect that you would hear at the legislature. There's there's one city in the state of Oklahoma who has changed their building codes. They were, for a number of years there, they had a little target on their back with tornadoes. And had a number of deaths, even at an elementary school there. And so that generated that city to change their building codes. But as far as I know, I don't know that any other city has strengthened those building codes like the city of Moore has.
Well, in our state, there is only one state. You can't, in order to make that happen, the state would have to adopt an optional appendix that a city could do. Otherwise, in our state, it's a statewide code that if you're a licensed contractor, you have to build to that standard. So cities don't have the option they have the option to adopt the building code, but they don't have the option to change that building code.
Interesting.
So we're in a little different situation, and so when we adopt the code in our state, we might be able, we are able to, the International Building Code, we're able to modify that throughout the state, but we are not allowing cities to pick and choose to increase an area, and in your state, I take it that they have the option to adopt the code or not, and increase the requirements as they see fit.
Yeah, things are different in our state from as you described. We do not have, the building codes are established by each community, each city. In fact, it was a little bit ironic. One day I was out visiting with another city, and just with the city leaders, with the city manager, the fire chief, and talking some things through. And the city manager mentioned to me that he wished that I would do something about the building codes. And I had to nicely throw back to him that you are in control of that. We don't control that. And I mentioned, as I did just a minute ago, the city of Moore, who did indeed step in and do that for their community. But yeah, we do not do that statewide. It's each community that is establishing those building codes in Oklahoma.
Thank you, Commissioner, and thank you all for your
Mr. Chair, can I comment real quick?
I don't know where that's coming. Oh, yes, sure. Sorry, Matt.
I'll run it through the chair if that's okay. On the building code, so this whole conversation came about at the beginning of the readoption of an in-coil building code model. And so we as NAMIC believe that it's important to have a statewide enforced building code, but as we just discussed, states do it vastly different. Some states have a statewide enforced building code. Some states have just a statewide building code that's not enforced. Some leave it up to local governments. It's kind of all over the map. But from our perspective, a statewide enforced building code is a foundation to mitigation against disasters. This is just an addition to that.
Thank you, Matt. Representative Dunnigan, I'll send it to you for closing remarks on this.
I really appreciate the work that's been done by apparently Alabama, and everybody else is copying, but Oklahoma, Kentucky, thank you. It's nice to hear your experience, and we'll incorporate that into the model. And just to the building code comment, as was mentioned, within the last year, we readopted the NCOIL Model Building Act, and so we have that model, which is a separate piece that we have done that, and I agree, it needs to be in the building code, and we have that model in place. Thank you.
Thank you, Representative. And just some comments from me on this, that the building code conversation is important, but the point, at least for me, of this legislation is making fortifying residences attainable for the average consumer. And so that's the piece of it that I appreciate, but I think it's going to take a multi-pronged effort to make sure that consumers are protected and our infrastructure is resilient. Anyway, we're not done with you, Commissioner Mulready. Next up, we're going to be talking about NAIC's Property and Casualty Insurance Market Intelligence Data Call. Some brief background here. You can find it on page 344, the NAIC press release back in March announcing the data call. Commissioner Mulready can provide a bit more detail on the call, but as many of you know, and if you don't, I don't know what you're doing in this room, this country is facing an arguably unprecedented hard market in terms of affordability and availability within the homeowners and auto market. So the information gathered from this data call will hopefully be able to help policymakers determine how we can help consumers and improve the market. Commissioner Mulready, obviously already here with us, and just to be clear, the rules about speaking through and with the permission of the chair is only to the commissioner. Everyone else has carte blanche to move along. He's taking off his Oklahoma commissioner hat and putting on his NAIC hat. Commissioner Mulready, please go ahead.
Thank you, Mr. Chairman. I was asked to give an update on the, what we call the PCMI data call, the Property and Casualty Market Intelligence data call that we embarked on at the NAIC on March 8th is when that went out. The target was to collect data from 80% of the market, at least 80% of the property market out there, the national property market, based on premium volume. And so that we also then allowed individual states that were going to engage in that to, if they wish to as part of that data call, solicit data from maybe smaller carriers that would not be included in that, those that are domiciled in their state. that they might have some that have a decent amount of market share within that state, but certainly aren't going to show up on the radar on the national picture. And so there's a number of those included in there as well. This was, it was a little effort with FIO. FIO had put out to us they wanted to do a data call. They solicited each state, and mine included, and they wanted all this data down to zip code level, and they wanted it within 30 days. Maybe it wasn't 30 days, it was a very unreasonable time frame. And so I responded. The answer wasn't no, but the answer was, look, we cannot meet these time frames. And so from that, the executive officer at NEIC worked with FIO and felt like this really is our role, and we can capture this, and we are the ones rightfully doing this. So we've reached an agreement with FIO to capture this data and to pull it all together into something readable and helpful, and then we'll be passing that along to FIO, passing that data along. There was a concern with the data on, especially in an election year, we didn't want that weaponized, if you will. That's my term, not NAIC's term. But so we have some control of this data call so that we can anonymize it and aggregate data and get that out there that would be helpful. So it hopefully will give us some deeper insights into market concentrations, competitiveness, coverage gaps, that sort of thing. There's an information gap certainly out there, but we are collecting amount of premiums, policies, claims, losses, limits, deductibles, non-renewals, and coverage types. So that went out, as I said, on March 8th. There was a deadline of June 6th to have things back. The vast majority of that was back to us, but the NEIC has been then chasing some of that additional data. I know, speaking for myself in Oklahoma, one of our domestics, it was one of those that I had included. They had just gone through a CEO change, and it kind of fell through the cracks, and so we've helped follow up with that to capture that data. So there's sort of this chasing of some of those that may fell through the cracks at this point. So we would expect that we will be passing along data to FIO shortly as they're sort of cleaning up that data. Different companies collect that in different ways. So of course, it's coming into the NEIC, not all in the same format, and that's part of the process of what's happening right now. So I don't have an exact date, but we'll be providing those subsets out to FIO as we have received those at the NEIC. Happy to take questions.
Thank you, Commissioner. Do you know how many states participated in that?
I do not have that number, no. We were not concerned about the states as much as we were concerned about the market share, 80% of the market share, trying to get to that number. So I don't know the exact number of states.
Any other questions or comments on this? Last chance to heckle Commissioner Mulready. I've had a great time. Thank you so much, Commissioner.
Good talk, thank you.
Next up on our agenda is a continued discussion on the Incoil Online Marketplace Guarantees Model Act, which until this morning seemed like a pretty straightforward conversation, but I understand we may have a very interesting panel discussion on that. You can find the model in your binders on page 337 and on the website and app. So we had an introductory conversation about this at our Nashville meeting in April. And since that time, Ohio Representative Brian Lampton has signed on as sponsor, but then he caught wind of the controversy and didn't show up to this meeting. So as a co-sponsor of it, I'm going to be carrying it today because I think the model serves as an important piece of policy to sort of clarify certain things, and I do look forward to this conversation genuinely. We won't be voting on this today. We will not be voting on this today. There's still plenty of time to have conversations with potentially a vote in November or even in the spring meeting. But I'd love to go ahead and get to hear from our speakers. So we'll hold questions until everyone's finished. Byron, you know what? We're on a first name basis, and I need my glasses.
No problem.
Byron Wobeater, we have had lots of good conversations about this, and you're with Airbnb. Please go ahead.
Thank you, Mr. Chairman, and thank you, members of the committee. My name is Byron Wobeater. I am Associate General Counsel of Insurance at Airbnb. I'm joined by Brad Nail, and we're pleased to express our support for the Online Marketplace Guarantees Model Act. I also want to thank Representative Lampton and, of course, Chair Bennett for sponsoring this model law. As Chair Bennett mentioned at our last meeting, or your last meeting in April, we provided an introduction to Airbnb and the online marketplace guarantee that forms part of our terms of service with our hosts and our guests in Airbnb. This is known as our host damage protection, or HDP. The HDP program has been part of Airbnb's terms of service for over a decade. To recap, Airbnb, for those of you who don't know, is an online marketplace facilitating the rental of property between a property owner, a host, and the renter, the guest. We currently have over 5 million hosts making properties available, over 8 million properties available throughout the world. We are in many cities, towns, rural areas all over the world. As you may know, one area of concern for our hosts is any damage caused by the guests to their property when they stay in an Airbnb listing. And just to recap, under our terms of service, the guest is contractually liable to the host for any damage caused that they caused during the Airbnb stay. And HDP just guarantees this contractual obligation. When the guest doesn't pay the host back for any damages that they cause, HDP backstops that obligation. Airbnb then has obviously recourse against the guest for any non-payment, and we do and can pursue them contractually. HDP is a limited incidental guarantee offered to Airbnb hosts as part of our terms of service. It's consistent with many other online platforms that offer similar guarantees, online platforms that connect to users. It's not insurance, as guarantees are legally distinct from insurance when they're incidental to a company's other primary business. Of course, our primary business being a platform to facilitate the renting of properties. There's no additional charge or fee to the host for the guarantee, and it's simply just an ancillary part of our service. And with that, I'll be happy to answer any questions the committee may have regarding guarantees or our HDP guarantee contained in our terms of service. And I'm going to turn it over to my colleague Brad to discuss the implications of the model law.
Please, Brad, go ahead.
Thanks, appreciate it. So the threshold question we usually ask ourselves when we're entertaining a new model law is, why is this necessary? I think we and the sponsors have identified a need to codify the practice of offering marketplace guarantees to provide consistency across the states and to provide guidance to your regulators who have questions about how these guarantees work. Today, there are some states that have existing statutes permitting this type of guarantee, but most states rely on a web of case law to affirm the appropriateness. We believe that both the marketplace and the regulators will benefit from the clarity of in the statute that this model law would provide. We've attempted to identify other potential stakeholders and work with them on this language. I know that the sponsors have had conversations with other stakeholders, trying to make sure that everyone's thoughts are heard and relevant concerns are addressed. This includes the insurance trade groups who've provided feedback. Some of that feedback has been incorporated from the discussion draft that was circulated previously to this model that is before you now. Several of the parties we've spoken to have identified the similarity to the service contract model, which some of you may be familiar with. Obviously, we'll continue to work toward resolution of any additional relevant concerns that are brought forward by the committee or other stakeholders. The proposed model does the following. It sets out definitions specific to this type of guarantee. It requires registration, so the state is aware of businesses offering guarantees under this law. That, again, is similar to the service contract model that you're familiar with. It sets out minimum financial strength for businesses to engage in this practice to ensure that the guarantees will be satisfied. It's consistent with the statutory scheme in many states and codifies the case law position in others by clarifying that these non-vocational incidental guarantees do not constitute the transaction of insurance. This is something that's ancillary to the primary business that is being conducted. This clarification will be helpful to your insurance regulators if there's a question around lawfulness. It requires disclosures for consumer protection and prohibits any activity that could be misleading to consumers. And finally, it authorizes enforcement of these requirements by the appropriate agency in your state, whether it's the Department of Insurance or Attorney General or perhaps another agency in your specific state. The practice of offering performance guarantees that are ancillary to a company's primary business has been around for years. As more of our commerce has moved online, and as we've witnessed the proliferation of three-party transactions within the sharing economy, guarantees like the one that Airbnb offers become even more important. So like many of the model laws that are introduced for your consideration, the goal of this one is primarily to provide clarity and uniformity in the statutes. So we support this effort. We believe that the model accomplishes that goal, and we hope that you'll give it your favorable consideration.
Thank you, Brad. For another perspective, John Schnauz from NAMIC.
Yes, and now for something completely different. No, at least slightly different. Before I say anything that might be perceived as critical of the model the chairman laid out, I want to acknowledge his influence is deep and wide. My flight home to Austin, Texas, was delayed considerably during his triggering comments about Oklahoma earlier. John Schnauz with the National Association of Mutual Insurance Companies. My colleague, Matt Overturf, at the April meeting alluded to some of the concerns we have with this model more generally during that conversation. I want to be a little more specific about those today because we do have some concerns. I think some of them fairly easy to resolve, some of them may not be. But the first set of issues I want to talk about are more general. This model puts before NCOIL an issue that's foundational but doesn't actually come up here all that often, which is exactly what is insurance. If you look through the literature on the topic, it's actually not as easy to define as you might think. There is not an agreed definition of it. I believe at one point NAIC spent about a decade trying to come to consensus on exactly what the term should include and didn't reach one. However, I will say that a three-party transaction in which one party is assuming the liability of another to a third party is really similar to how a lot of things that everybody regards as insurance work. Auto liability insurance is essentially that sort of setup. The liability portion of homeowners insurance is very much that kind of three-party transaction. A lot of commercial policies are exactly the same way. So I guess I would paraphrase, I think it was Potter Stewart, the Supreme Court Justice. I may not know exactly what insurance is, but this looks a lot like it. And so that's our main foundational concern, and it's a difficult one to address without not pursuing the model at all. But I do want to put that out there because what Airbnb is asking to do here, and it's not just for them, they may be perfectly responsible about this program. We have no reason to think they wouldn't be, but for any online marketplace, this is allowing them to assume that assumption of risk, transfer of risk sort of role, that again looks like insurance, and that when it is called insurance in all of your states is subject to volumes and volumes of well-justified regulation, as opposed to what's in this model, which is pretty bare bones, frankly. It's nothing like that. So that's the first concern. To go a little bit to the specific concerns, I guess the first one I would say is I think there's a lack of evidence, at least to date, by the proponents of this model that there is something about what the regular insurance market is doing that makes this necessary. In other words, is there a deficiency out there in what coverage is available? There is commercial coverage for short-term rentals for people who do it all the time. Many homeowners insurers for rentals that aren't always rentals, for example, ones that the owner occupies. Homeowners insurers offer that coverage through an endorsement. It's not part of the standard coverage, I want to be clear, but it, from our perspective, to some extent is available. So I think the proponents of this model ought to have to carry the burden of showing why does the regular insurance market not already cover this sufficiently. That's the first concern. The second specific concern is this bill is a lot more expansive than the issues that the proponents have identified to try to address. They've talked about in the past, at the last meeting, they talked about sort of smaller items, lamps and towels and those kinds of things. The coverage today was referred to as limited and incidental. If it's intended to be limited and incidental, then revise this model so that it is only covering limited and incidental items, because there's nothing in the model that actually requires that right now. It's much broader. And so if you're going to go down this road, I think you should make it what the proponents have suggested they wanted, which is a more limited sort of coverage. The last specific point is there are a couple of sections in the model that really haven't been talked about at all, but from our perspective are particularly off the point to what the proponents are trying to do. Sections 5 and 6 are all about the relationship between the provider of these guarantees and an actual insurance policy. And if there's a reason that needs to be in this model, we're willing to hear it, but I don't think we've heard it yet. We've heard about why they want to have a program that's different than insurance. That's fine. Why do we also need language in this model that goes to the insurance point? To conclude, I want to be clear, on our general concerns, I'm not sure how easy those are to address. Those are big picture philosophical concerns with the whole model. So I don't want to suggest that if the specific issues are addressed that we would just be fine with the model. I'm not sure that's true, but I do think those specific concerns at a minimum should be addressed. The final concern I would mention, this is more of a marketing point, but I just want to point out that the National Council of Insurance and Marketplace Guarantee Legislators is not an acronym that flows off the tongue very well. NCOIMAGOL, and yeah, that won't work. So just bring that to the committee's consideration. That's all.
That's fair, John, but in fairness, we've kind of run out of acronyms that do make sense, I think, if you've been to enough of these meetings. So I appreciate everybody's comments, and I know that there are lots of questions around this, and I want to open it up to legislators for questions and comments, but Byron, could you kind of outline what insurance coverage Airbnb requires of the people on its platform, and does Airbnb offer any of those products?
Yeah, we don't require insurance coverage. We ask the host to, get with their broker and obtain the appropriate insurance coverage. However, we do have and maintain liability insurance programs, and these are just typical liability insurance programs for the host throughout the world, and those for slip and falls and things like that.
And if you could respond to sort of one of the assertions was what is the need here? What's the there? Can you talk about what kind of spurred this, what you all see as a need to establish this?
Yeah, and as we kind of talked a little bit earlier, we've been offering this program for over a decade. We went to the NAIC in 2016. A white paper was drafted and published on this program, and we didn't have any questions regarding the program because of the way we set it up was lawful. We've had recent questions from regulators on, of course, the philosophical point of what is insurance and what is not insurance. And so given those questions and the need for clarity, as we kind of mentioned earlier, some of it's codified in statute, some of it you have to go to the case law, and to codify all of that, we think it's necessary to make it clear, and also to provide the consumer protections that we think are important given the proliferation of these guarantees online.
Yeah, John's asking all the right questions. He's asking the same questions that some regulators are asking. And the answers are best provided by the legislature. If you look at the service contracts, if you look at extended warranty programs, these are things that can look a lot like insurance, but they're not, because we've vetted them through the legislatures and determined that those programs make sense to exist outside of the sphere of insurance. And this really falls in line with that.
Thank you, Brad. Are there questions from Larry?
Thank you, Mr. Chairman. I have a few questions, if I could just do that.
Go on ahead.
Thank you. I don't want to get in trouble with the chair for sure. So you mentioned, you asked, the chairman asked the question, is insurance required by the host? Your answer was no, but we have a liability insurance program available. Are you telling me that the hosts are not required to have liability insurance?
Not to join our platform.
That's a little concerning to me, first of all. There was testimony given that other stakeholders have been involved in the conversation of the crafting of this proposed model legislation. Is VRBO and HomeAway, I guess they're the same now, were they a party to this?
No, they do not have, from our last review of it, they don't have something like this, but various others out there that connect users were consulted and we discussed it with them.
So that makes me wonder, are you just trying to get a competitive advantage somehow over them?
If I could just address that. It's not an issue of a competitive advantage. Right now, VRBO just has a different setup to where they operate. They might end up adopting something like this, but I mean, there's nothing stopping them from doing it.
All right. Do you all have a physical presence in the state of Georgia?
An office in the state of Georgia?
Yes.
I'd have to check on that, but I can get back to you.
So for Georgia citizens that allegedly damaged property and it's basically turned over to Airbnb to then sue my Georgia residents, I'm just concerned about, their due process.
Can you say that again?
Well, you don't have a residence in Georgia, I don't think. You may, but anyway, if one of my citizens rents, our Airbnb and they are alleged to have damaged the property, instead of working it out with the host or filing it on their insurance or whatever, they may have Airbnb coming after them. Sounds like to me, and that poses some concern.
If I can clarify a little bit, Byron didn't go into as much detail on this because we didn't want to repeat all the stuff from the last meeting, but the first step is always for the host and the guest to work it out on their own. The guarantee that Airbnb offers, and it's only to the host. They're not insuring the guest. They're not providing anything to the guest. They're just guaranteeing to the host that property is going to get, the issue is going to get resolved. But the first step is always for the host and the guest to try to work it out.
Mr. Chairman, one last point. The question was asked, what need are we trying to fill? I think when you rent a property through Airbnb, there's an option for the guest to buy a damage waiver or to buy insurance. There's certainly insurance available in the private market already to cover this kind of thing. There's insurance for the host and the guest for this type of thing. So that's my last, I guess, comment is, or question is, what are we trying to solve that's not already available?
I think I would look at it as a supply side issue. In order for people to feel comfortable putting their property available for this, they need some guarantee that if something happens to it, it's going to be resolved favorably. And so
they could buy insurance in the private market.
Some homeowners insurance might offer coverage. Some homeowners insurance is going to exclude coverage. There might be riders or endorsements that are available. It's complex, but through this guarantee program, and they're certainly welcome to and should consult with their insurance brokers and agents before doing this, but to provide some consistency and peace of mind to the property owners, this guarantee program works well for that.
Thank you, Mr. Chairman.
And I actually just want to address your question earlier, or your comment on this Airbnb going after your citizens, because I think it's important. We do have various appeals processes in place where we will work with them and just make sure that we have the story right before we would do something like that.
Okay, I have a couple more questions. You may not have this on the top of your mind, and I apologize for not asking ahead of time, but what is the most common scenario where Airbnb has to step in and sort of act as an arbitrator in this scenario between a property owner and a renter? Like, what is is it china has been broken or a glass pane has been cracked? What is the most common thing?
Well, yes, I'll address that. First, it's actually quite rare. I mean, I think we looked at it recently, and it's one out of over 500 nights involves Airbnb. So it's rare to begin with. The most common situation are towels, sheets, and various small item numbers or small items that don't amount to a lot of money. And so how it kind of works generally is, the guest may damage a towel, and the host goes, as Brad had mentioned, goes directly to the guest and says, you damaged this towel, here's a photo, I'd like X amount of money. A lot of times those guests will either pay or they'll work it out some other way before it even comes to us. But we're really talking about low-level items for the most part.
From a customer satisfaction standpoint, and I guess speed of resolving the issue, can you talk about what that timetable is now and what it might look like? I mean, I know that there have been scenarios where certain government subdivisions have required you to provide some kind of product in this way. What is the timeline difference, and what is the customer satisfaction experience difference between those two things?
And when you say timeline from
From moment of realizing that the towel had been damaged or stolen to being made whole in that.
Yeah, and many of these requests for reimbursement that come to Airbnb are handled well within 14 days. It's only the larger ones that are actually even more rare that could take a little bit longer. So they can be handled very, very quickly. And then your second question was?
I don't know, I already asked it, so I forgot. I think it was what would be that timeline if there was a product required, an insurance product required for this?
Well, it would make it certainly more cumbersome because you would have to go to a third party. Then they would go through and determine, what happened, whether the host and guest, tried to work it out, whether they did it, and that timeline would probably be expanded, and it would make the process a lot more complicated.
Thank you for your candor on that. President Oliverson.
Thank you, Mr. Chairman. Yeah, I'm curious. So just following on what the chairman was asking you, so, I had a vacation property for a while in Destin, and we didn't use Airbnb, but the company that managed the property for us just collected a deposit in advance from everyone that rented that property. And then if there was a towel or something simple like that, I mean, I'm sitting here, Representative Jordan and I are like waiting for you to say the couch ended up in the swimming pool or something like that. So I think what we were thinking, but I mean, why not just have a deposit and just say, hey, you messed up this towel and that's coming out of your deposit?
I think one thing is we don't want to have consumers put that money up front, right? We don't want them to not have access to that because a lot of times they're not, and as I said earlier, it's quite rare, they're not going to damage anything.
But don't you think that if they were charged a deposit, that's also influences consumer behavior on some of this stuff?
I guess it could.
If I may, I think you're thinking of the kind of trip that I tend to take. We take a golf trip once a year with 12 guys, and we rent a big house. And the couch could end up in the
couch in the swimming pool?
There might be some alcohol purchased. I'm not testifying one way or the other. But, we pay a deposit for that kind of thing. But, when you check into a hotel here, you're not necessarily paying a deposit. They have your credit card on file, and they can deal with you on damages. And I think it's a different market, at least in some respects.
I mean, I guess it kind of, having been on the landlord side of this thing, that what you're describing to me gives me a certain amount of discomfort with your business model from the standpoint of I don't like the idea of, as the landlord, having to work this out with the rentee. I mean, I think most people that do the VRBO stuff like the idea of not having to be physically present there, being the landlord, and just know that it's being taken care of while they're not there. But maybe that's just me.
I think that...
Thank you, Mr. Chairman.
Can I?
Sure. I would note that you never really gave a direct answer on whether you have thrown a couch in a pool or not, but you can answer whatever question you think you need to answer.
No, I'm the one that gets it out of the pool afterwards. I think the concern that you just expressed is reasonable. And it's similar to the same concerns that we heard on the TNCs about using your car to provide people rides. But over time and with volume, you see that it works. And Airbnb's been around a long time, and over time, with the kind of volume of business that they do, it does work. But this guarantee is also one of those things that gives that owner some peace of mind that there will be an appropriate resolution when something does come about.
Any other questions? Yes.
Thank you, Mr. Chair. It's more of a comment than a question. I do want to make note that I've used Airbnb before, and you do see the hosts, they're rated, and you're rated as well. So I think that would actually impact consumer behavior as well. If you have a really low rating, you probably aren't going to get that rental. So, thank you.
Similar vein, you know, I know of folks who use a sort of a property management company as sort of an intermediary. They own several properties and they rent them out to the Airbnb. I mean, is some of this stuff being handled in that way? I mean, if I own a property in Florida, I don't. But I never see it, but I know I have a property management company that comes in and cleans, you know, those towels. It would be on them to determine whether or not the towels have been stolen or something. So, I mean, and from these conversations so far, I haven't heard that a lot of these issues are coming up. Is this, I mean, is there widespread theft and damage that's just not being reported, or is it just a relatively low occurrence?
It's definitely rare. I do, the other piece that you're talking about, we do allow co-hosts as well on our platform, and they can actually manage this process as well to go through the guarantee.
Well, this is an interesting conversation for me and probably very few other people. So we'll continue this conversation in the interim, and it'll be brought up again in the fall meeting. And obviously, all sides at the table, maybe we'll have something to vote on by then, maybe not. But I appreciate everyone's willingness to engage on this. John, the existential question of what is insurance that you asked me over a bagel this morning was a really good mental exercise for me. So we will continue these conversations, but I appreciate everybody putting their best foot forward. Next up, I want to talk about the In-Coil Motor Vehicle Glass Model Act. It's less that I want to talk about it, more that that's what's next on the agenda. You can find the model in your binders on page 319. Before we go any further, I will turn this over to my Vice Chairman, Representative Pollack.
Thank you, Mr. Chairman. I'll be brief and just note that I'm proud to sponsor this model as it's based on a law we recently passed in Kentucky. In response to rising concerns about auto glass repair fraud, we took action to protect consumers from deceptive practices in the auto glass repair industry. The law aims to curb fraudulent activities and ensure transparency and fairness in the auto glass repair process. It actually follows what Florida enacted last year, so I think we're starting to see a trend of states taking action on this, which is why I think it's good timing that In-Coil is taking this on. I look forward to the discussion today and certainly welcome input on the model throughout the process. Thank you, Mr. Chairman.
Thank you, Mr. Vice Chairman. Well, we will now hear from Eric DeCampos of the National Insurance Crime Bureau. Eric, please go ahead.
Thank you, Mr. Chairman and members of the committee. My name is Eric DeCampos. I represent the National Insurance Crime Bureau. NICB is a nonprofit organization that works with state and local law enforcement, as well as our member insurance companies, to detect, prevent, and deter insurance crimes, and that includes motor vehicle glass fraud. So today I'll provide a short overview on vehicle glass fraud, as well as hitting on some of the key notes of the Model Act. And so to begin, when we're talking about vehicle glass fraud, we're talking about a scheme that's largely perpetuated by unscrupulous glass shops. And let me be clear, I'm talking about a small number of bad apples and an otherwise good bunch. But nevertheless, they approach consumers in public spaces, usually parking lots or other locations similar to that, where they're able to lay eyes on a consumer's vehicle, see the little divots on their windshield, see a tiny little crack on their windshield, And they're able to solicit these consumers to sign contracts with them to repair or replace these windshields. And they tend to operate in states or favor states where there are no deductibles for windshield replacements or repairs. And the reason being is that it's part of the scheme. It's part of the solicitation. They come up to you and they say, hey, I can get your windshield replaced or repaired, and you don't have to pay a penny because your insurer will pay for everything. And if that doesn't work, then they'll utilize financial inducements like cards, gift cards, cash. In some cases, we've even seen Omaha steaks offered. In addition to that, they tend to exploit contractual mechanisms like assignment of benefits that allow them to assume control of a consumer's rights or benefits to an insurance claim, and they use this as a vehicle to file inflated claims with insurers. And in recent years, we've seen some new elements arising out of these inflated claims, and that surrounds the advanced driver assistance systems within your windshields. As your car becomes more advanced, basically a computer on wheels nowadays, so too are your windshields. Now they're embedded with these tiny little sensors called ADAS that are very costly to repair or recalibrate. And we're seeing inflated claims coming in for recalibrations that were either not warranted or work was charged but never performed at all. And the end result is inflated claims are being filed. Insurers are flagging these claims as being questionable or for suspected fraud. But these bad actors are quickly turning around and filing frivolous lawsuits against insurers for lack of payment. And there's perhaps no greater example of that than in the state of Florida, where prior to 2023, Florida was a sue-to-settle system, where the legal and regulatory environment incentivized inflated claims and incentivized frivolous lawsuits around these claims. Over a 10-year period, we saw a 4,000% increase in glass lawsuits from 2011 to 2021. And in 2023, as the legislature was looking into closing some of these loopholes that were being exploited by these bad actors, we saw another 46,000 lawsuits filed over an 8-month period. Now, what did we do about it? Well, NICB joined the industry and some other consumer protection or consumer advocacy organizations in order to successfully advocate for 3 key provisions. One was the elimination of Florida's assignment of benefit statutes, taking away that key vehicle that's been serving as the pillar behind these schemes, prohibiting financial inducements, taking away that key marketing tool that's being used to convince people to sign on the dotted line with these bad actors, and then creating some transparency around ADAS recalibrations, again, those tiny little sensors in your windshield. The end result of that was very positive. By Q1 2024, glass-related lawsuits decreased to just under 3,000. So again, 46,000 during that 8-month period in 2023, and then by Q1 2024, less than 3,000. That's a big success and a testament to how effective these reforms were. But there was an unintended consequence to our success, and that consequence was these bad actors, now that the environment was no longer conducive for them to carry out these schemes, they packed up and they moved to other states. And at the top of the list were other no-deductible states, like Kentucky and South Carolina, or states with no-deductible options, like Massachusetts, for example. The reason being is it's another safe haven for them to commit these very same schemes, offer the promise of a free windshield replacement because your insurer will pay for everything. But while I make the point about the no-deductible states, I want to be clear that just because a state may have a deductible for windshield replacements doesn't mean that they're not being targeted by bad actors as well. I want to direct your attention to this slide here. And here you'll see the top 10 states for questionable claims involving vehicle glass the top 10 states for questionable claims involving vehicle glass reported to NICB over the last 4 years. It's not surprising to see Florida and Arizona at the top of that list, where auto glass fraud is a significant issue in these states. But I want to call your attention to states on this list like Texas, Colorado, Michigan, where there are deductibles. Sorry, President. Where there are deductibles for windshield repairs and replacements. And what this is a testament of is bad actors will move to states, or they'll operate in states where they believe that they can make a profit off of their schemes. They will move to states where, regardless if there's a deductible or not, if they can exploit the regulatory environment, if they can exploit something like assignments of benefits, then they will do so. And this is why I'm encouraging not just everyone here today on this committee, but all states to review their laws, to review their regulatory environment, and identify these loopholes that could be exploited. And I need to commend Kentucky and the Kentucky delegation here today and all your colleagues back home for passing comprehensive legislation in the form of Senate Bill 29, which did exactly that. Kentucky was proactive. They didn't want to become the next Florida. And I encourage all states to have that same line of thinking and to be proactive, to stop themselves from being the next safe haven for these bad actors. And so I wish to thank Vice Chairman, Representative Pollock, for introducing this Model Act, which is based off of Senate Bill 29. And this is important, and I really need to mention this because Senate Bill 29 was the product of negotiations and consensus amongst a myriad of stakeholders from, as noted on the screen here, from your vehicle manufacturers to the glass industry, and even the trial attorneys came to the table to come up with language that can be passed. And so this is why Senate Bill 29 is serving as the framework for this model. And to highlight some key provisions around the model, first and foremost, at the top of the list, it prohibits assignment of benefits for property and casualty policies. Let's take away the vehicle that has served as the pillar for these schemes. Let's do what Florida did, what Kentucky did. Let's take away the ability for these bad actors to take control of a consumer's rights, of a consumer's benefits to an insurance claim. Let's take away the ability for these bad actors to exploit these contractual mechanisms to file inflated and potentially fraudulent insurance claims and frivolous lawsuits against insurers. Next, guardrails for ADAS. This is as much of a consumer protection issue and from an insurance fraud standpoint as it is to a public safety issue. This model will require that when a consumer leaves that glass repair shop parking lot, that their ADAS, their Advanced Driver Assistance System, is operating to manufacturer specifications. So that way, when they're 10 miles down the road, ADAS doesn't fail on them, and then they end up in an accident. And if that glass shop cannot meet those manufacturer specifications, then this model law will require that glass shop to direct the consumer to a repair shop or some other entity that can. Again, this is a critical consumer protection. The model also provides guardrails around claims practices. For example, it requires an insurance claim to be filed before any form of repair, replacement, recalibration to a windshield can be performed, which will help tackle some of the inflated claims that we're seeing around, not just the system, but just in general. The Model Act also provides a list of prohibited, unfair, and deceptive trade practices. Just going back to the well, for example, the financial inducements. No more cash, no more gift cards, no more Omaha steaks that these bad actors can offer to consumers to get them to sign on the dotted line. And then the final point is there are some anti-steering provisions within the model as well, and this is designed to ensure that consumers have options when they're seeking out replacements, repairs, recalibrations to their windshields or vehicle glass needed for their motor vehicles. And with that, I wish to thank you, Mr. Chairman, and members of the committee for the opportunity to speak today. I'm happy to answer any questions regarding the presentation or the model, and I also have my contact information listed above in case anybody wishes to reach out following this meeting with any questions.
Thank you. I do want to point out you got an audible reaction from Sarge on the No More Omaha steaks, so thanks for keeping this exciting. Senator Howe, I think you had a question.
Yeah, so from my understanding, what you proposed here is, you know, my insurance company, I've got no deductible, and if I go, you know, if I submit a claim for my windshield, they will tell me, hey, that there's a list of pre-approved glass replacement installers. Mm-hmm. And if I go to one of them, I don't need to go get a number of the estimates, the invoice, all the rest of that stuff. If I just go to them, they'll just replace it. It's all taken care of. Mm-hmm. If I choose to go to someone that's not on their pre-approved list, I've got to go through the hoops to have someone else do that. And it's not only for glass. It's that way for any of my body shop repairs. So is this going to prohibit that type of what you call steering, that they can't guide me to some shop that's already pre-approved that they know they're not going to get any of these deceptive practices?
So the model is designed to just provide a little bit more flexibility to the consumers, so that way you're not steered to a very specific provider, one provider, for example. It just increases your options a little bit, whether within that network, in order to seek out the repairs or the replacements that you need. So it's more geared towards prohibiting that one, being steered to one particular shop in general.
So in other words, the answer is yes?
In other words, the answer is essentially yes. If I remember your question correctly, it won't prohibit you from. It's designed to not limit you to just one specific option.
Well, my concern is I don't have that option to go to those 3 or 4. I'm going to be required to go get an estimate, a number of estimates to send them in. And to me, that puts more hassle on the consumer.
Sure.
Instead of just being able to go to 2, 3 different shops, get my glass replaced, and I'm done, and it's all taken care of because these shops are already pre-approved. I kind of like that option, so thank you.
I get a sense that Edmund wants to say something.
Yeah, just to address your concerns, and I'm not sure if Eric, I don't know if you understood the question exactly, but if you look at the Section 7 under anti-steering, it doesn't prohibit what you're talking about. So it doesn't prohibit insurer from maintaining a network of motor vehicle glass repair shops, and it doesn't stop them from giving you that list. So you can still have that list, and they can still have their network of dealers that you can rely on, if I read that correctly. I think that addresses the issue that you're bringing up. And that's on page 324.
Mr. Chair?
Yes?
I understand that, but in the other sections, it still requires me to get an estimate prior to all this, and it still seems to require me to go through the hoops, even if I do go to those preferred repairs. And that's my concern. If I can't, it seems to install me, it requires me to jump through hoops that I really don't want to go through.
If I may respond, Mr. Chairman.
Oh, go ahead.
Thank you, Mr. Chairman.
Just losing total control of this committee, I apologize.
So the way I interpret that is that's actually a critical consumer protection. So you're not being faced with these inflated estimates, or I'm sorry, these inflated bills after the repairs have been done. And so having that written estimate ensures that you're seeing what is exactly being done from a repair standpoint to your vehicle glass or to whatever bodywork that's being performed, and ensures that when that claim is submitted to the insured, that it has all of the information necessary for that claim to be processed.
Okay. Any other questions, comments, accusations? Okay, I appreciate that conversation, and Eric, thank you for being here. And obviously, Vice Chairman, appreciate your efforts on this. Do you have any closing remarks?
Sure. Just again, kind of to, the key word, Senator, I think I heard was when you contact your insurance company. And I think in the nutshell, that's pretty much what this model is, and not somebody, and I won't call them a third party, but somebody else contacting your insurance company. And so this particular model here kind of dictates that in a nutshell. This is a consumer protection model, and that's what it specifically is meant to be. So just want to kind of share those thoughts. Look forward to continue the discussion. Love the comments and the concerns that you may have, but let's continue the discussion and make good policy. Thank you.
Thank you, Mr. Vice Chairman. Okay, so next on our agenda is an update on the federal initiatives impacting the title insurance market. On page 347 in the binders, you'll find a letter that was sent by our INCOIL president, Tom Oliverson, to the Director of the FHFA, expressing our concerns about the agency's proposed title acceptance pilot, which would permit title insurance obtainment requirements to be waived in certain circumstances. At the in-coil DC fly-in this summer, we also spoke with our congressional counterparts about this. Since then, we've come to learn that the CFPB has issued an RFI, which could lead to some more federal involvement in the title insurance marketplace, which is troubling from a federal encroachment standpoint. So with us today is Elizabeth Blosser of the American Land Title Association, who can provide us with more information on both topics. Please go ahead, Elizabeth.
Thank you, Chairman Bennett. I am Elizabeth Blosser. I'm Vice President of Government Affairs at the American Land Title Association. We are the trade association that represents title agents and underwriters. I do greatly appreciate the opportunity to talk on these two topics. We appreciate NCOIL's interest in the topics and Representative Oliverson's leadership. As this committee has discussed in the past, there have been several federal initiatives and activities by the GSEs, Fannie Mae and Freddie Mac, that run contrary to the state-based system of title insurance regulation. We also believe these initiatives pose risks to consumers and to the greater real estate market. Given this is the first time I've had an opportunity to address this committee, I do want to do a quick level set on title insurance because it is, we're a little bit different from other P&C lines. Whereas most P&C insurance covers risks that are going to happen in the future, title insurance primarily covers risks that have happened in the past, so unpaid liens or fraud or forgery that might be associated with your title. Because of the unique nature of the insurance, our claims rates are relatively low, which we think is great news for consumers. When you go and buy a home today and you get the keys, you aren't thinking in the back of your head, do I really own this property? And that's the value that title insurance brings to consumers and in providing certainty within the real estate market. Because of that, about 80% of your one-time title insurance premium goes to risk mitigation efforts. The industry estimates that they find upwards of $600 billion of title risk exposure every year through their title examinations processes related to real estate transactions. Those are then addressed in the curative process, mitigating potential risks for home buyers. For reference, only 8 cents on every dollar goes to industry profit, and when it comes to claims, over 50% of claims appear 4 years after an insurance policy has been issued. So with that background, let me shift to talking a little bit about the FHFA's title acceptance pilot. By way of background, this is not the first time the GSEs have promoted unregulated title insurance. Back in 2022, we learned that Fannie Mae and Freddie Mac had approved the use of unregulated title insurance alternatives on certain types of loans. While these are marketed as equivalent products, they don't necessarily carry the same coverages, and most importantly, they bypass state insurance laws and regulations. We've also come to realize, as we see more of these in the marketplace, that they are not necessarily cheaper and in a number of instances more expensive than regulated title insurance. The promotion of unregulated products was escalated in March through the approval of this title acceptance program. It came the same day as the State of the Union when the president announced that the administration was going to be eliminating title insurance fees for federally backed mortgages. Obviously, that's a broad statement, and what we know from FHFA's FAQs that were released that same day is that there's a pilot program that's going to allow specifically Fannie Mae to operate as an unlicensed title insurer on certain refinance loans. As we understand it, the process includes an automated title review, and then lenders pay to Fannie Mae a fee to cover any risks that there are as a result of an unexpected title defect. So certainly that falls within the definition of title insurance under most state laws. There has been significant bipartisan concern about the pilot program, including on Capitol Hill. And so let me quickly talk about what those concerns are. First, there's been a lack of transparency around the pilot program. If processes that were in place were followed, there would have been ample opportunity for state legislators, regulators, industry, members of Congress, consumer groups, and others to bring up questions and concerns during a public notice and comment period. Second, we're very concerned about consumer risks and the fact that consumers are going to be put into really an experimental claims process. So unfortunately, fraud is very much rampant right now in the real estate market. Another topic that I'm happy to talk to anyone about. But if you are a victim of impersonation fraud, somebody takes a cash out refi in your name, what is your recourse as a victim? Are you going to have to call Fannie Mae, convince them that there was fraud, and then negotiate some sort of settlement? It is concerning that all of this would happen outside of a regulated claims process. And certainly, if the process is lengthy or difficult, it could result in loss of home equity or even loss of one's home. Finally, and as mentioned earlier, this pilot does run contrary to the well-established state-based system of title insurance regulations. With the approval of FHFA, Fannie Mae is acting as an unregulated insurer. Certainly, you could look at this pilot and say that it is conducting the business of insurance without a license, which of course violates the NAIC model. And beyond that, creates a very concerning precedent. At this point, the pilot program is moving forward despite bipartisan concerns that have been raised, as I mentioned, including by members of Congress, regulators, and legislators. Fannie Mae has put out an RFP to gather proposals for different products to be used as part of this pilot program. Next, I can touch quickly on the CFPB RFI, and then I'm happy to take any questions on both of these topics. The CFPB has recently issued a request for information, and it raises questions about the Bureau's intentions regarding federal oversight of title insurance pricing. The RFI specifically relates to fees imposed in a mortgage transaction, and of course that includes title insurance. There's also been some insinuation in this process that title insurance might be considered a junk fee, although that was walked back to some extent by Director Chopra in a recent congressional hearing and a back and forth with Congressman Sherman. The title insurance industry will be providing some comments and feedback on the RFI, and it will center primarily on the fact that we want to come together as government entities and private industry to address affordability. That's an important topic, and it's one we want to talk about. It's a discussion we want to be part of. We in the title industry believe in the dream of home ownership and all of the benefits that brings to people, and we want to see more people in homes. The letter is also going to provide some data on the costs of title insurance, showing that costs have nominally decreased 5% over the last 5 years. If you look at that on a constant dollar basis, accounting for inflation, that number actually goes up to 36%. This is primarily due to innovation in the industry, so things like digitizing past land records, using digital closings, things of that nature. However, despite the use of this innovation, on average, title agents spend about 22 hours on each real estate transaction. Finally, the letter is going to outline the very local nature of real estate and the differences in state property laws. And these factors reinforce the value of a state-based system that can address these types of nuances. And certainly states have a strong vested interest in being able to regulate the title risks in their state, as well as the authorized insurers. Before I wrap up and take questions, I do want to make everyone aware that the Federal Insurance Office did hold a roundtable just last week on title insurance and reforms to the industry. Because the meeting was subject to Chatham House rules, I'm very limited in what I can say about what happened in that meeting. However, the Department of Treasury did put out a readout on the meeting. I think it's pertinent to these discussions. So if I may, I'm just going to share that quick readout so you get a sense of the meeting. So this was put out just last Wednesday. Today, the Federal Insurance Office at the U.S. Department of Treasury hosted a roundtable discussion with representatives from the financial services sector and consumer groups to discuss the title insurance industry and analyze potential reforms. This was as part of the Biden administration's efforts to lower costs for home buyers. Title insurance is a product offered by commercial insurance to mitigate title defects and address disputes concerning property ownership and priority of the mortgage lender's interests arising after closing. Lenders generally require that such insurance be obtained and paid for in connection with the closing of a residential mortgage transaction. Senior Treasury officials led discussions that addressed the structure of the title insurance industry, the costs and benefits of title insurance, consumer awareness and protection, and various proposals for reforms to lower costs for home buyers. Participants in the roundtable included representatives from groups that advocate for consumer housing access, as well as title insurers and agents, lenders, state insurance regulators, academics, and other stakeholders. FIO was tasked with convening the roundtable in connection with President Biden's call for federal agencies to take all available actions to lower home closing costs and help more Americans access home ownership. Among its other statutory duties, FIO monitors the extent to which traditional underserved communities and consumers, minorities, and low and moderate income persons have access to affordable insurance products, advises the Secretary of the Treasury on major domestic insurance matters, and consults with state insurance regulators regarding insurance matters of national importance. Today's roundtable will assist FIO in its work as it continues to consider policy options with regard to title insurance. So that is the readout, and with that, I'm happy to take any questions.
Thank you so much, Elizabeth. Are there questions? Yes, ma'am.
Thank you. Just a general question. It sounds like this could likely bump up against the Chevron changes that have been recently, the decision that was recently made. Who would have standing in that scenario to bring suit?
So I will admit to not being an attorney. So, I think that there's a lot of questions around the Chevron case that are going to come up in a lot of different scenarios, and I think everybody's still sorting that out.
All right. If there aren't any other questions, President Oliverson, I know that you sent the letter. If there's anything that you'd like to say to update us about this issue, please feel free.
Thank you, Mr. Chairman. I appreciate Elizabeth bringing this to us, and just for all of our friends in the back of the room, we were completely unaware of this issue until the spring meeting when Elizabeth brought it to our attention at a CIP event. So, we're glad that you all are here, and I would just always encourage you to use that as an example of we only know what don't assume that the people up here know everything that's going on in the industry. If there's an issue that's affecting your business, we'd like to know about it, but we may not know about it, so be sure you tell us about it. The other thing I'll say is that when we did go to Washington, D.C., my reception was generally warm from legislators on both sides of the aisle, that they thought that this was a really bad idea on the part of the federal government to reach into the title insurance industry like this, and I guess we'll see. I'd be curious, Elizabeth, has anyone at the industry talked about the implications of the Chevron decision at the Supreme Court? I'm not sure that the FHLFA, or whatever it is, has the authority to even do this statutorily. I know they think they do, But I'd be curious if there's been any conversation about potentially suing them over this.
So I think, as I said, there's a lot of questions still on what Chevron means, whether it relates to this or other ongoing regulatory matters. So still trying to sort all of that out.
Okay, thank you.
Thank you, and I also want to note, we'll just mention that in light of the Chevron decision, we'll probably be talking about the impact of that on the industry potentially at the fall meeting, so thank you. I'd also point out that I think I've demonstrated that plenty of us, myself specifically, don't know much at all about the industry, so it's always nice to learn at these meetings. Thank you, Elizabeth, for your words today, and thank you, everybody, for your questions. It may be that this is the last thing on the agenda. It isn't. It isn't. Last on our agenda is the consideration of readoption of model laws. As a reminder, per INCOIL laws, all INCOIL model laws are scheduled for consideration for readoption every 5 years, and if it's not readopted, then it sunsets. You can view the models in your binders starting on page 350. As a reminder, during our interim meeting last month, we offered an opportunity for comment on these models, and so today we won't be taking any testimony. But if there are any questions or comments on the models by legislators, we can entertain those now. Does anybody have any comments, questions? That's great news. Hearing none, I will entertain a motion to readopt the models, and then a second, and then a voice vote. To be clear, these are just the models that we have jurisdiction over as the Property and Casualty Committee. I can read them word for word, every single model, or we can just accept a motion. Thank you. So moved. Do I have a second? Second? All in favor? All opposed? The ayes have it. Thank you, everyone. Is there any other business before the committee? Great.
There'll be no break before executives.
I've been told that there will be no break. This is terrible news. There will be no break between this committee and the executive committee after this. Hearing no other business, I will entertain a motion to adjourn. I hear a motion in a second. All in favor? All opposed? Adjourned.